Hi, everybody. Class is about to start. Has everybody read this book yet? And if you haven't, are you going to buy it and read it? Yes. Everybody's nodding, sort of? Okay, well, certainly hope so. I'm Jane Harmon, President and CEO of the Wilson Center. Very pleased and honored to host a conversation with a longtime buddy of mine, predating my service here. I also welcome back Andrew Seeley, the former executive VP of the Wilson Center, longtime scholar here, founded our Mexico program, and if he hadn't showed up, I would have given Fred hell, but Tom Healy is a marvelous man. He's a poet, he's a Fulbright program aficionado, and he's Fred's partner, and he's fabulous. So welcome to Tom. All right, so everybody, it all started with Lillian Vernon. The Wilson Center skews older, so many in this audience should remember her wonderful catalog, which I received on a regular basis. Raise your hand if you've heard of Lillian Vernon. Is that it? Oh, good grief. What's wrong with these people? When I first ran for Congress in 1992, I met Lillian Vernon in New York, and she helped me. I also met her son, today's vaunted book author, who helped me even more and became my great friend. Fred and I have followed each other's careers forever. His is a lot bigger, but mine's not so shabby either. He has held really cool jobs, including Deputy Administrator of SBA. Were you the administrator too?
For about 10 days, I can tell you that.
10-day administrator of SBA under President Clinton. Dean of the Milano School of International Affairs, Management, and Urban Policy. I had no idea the title was so long. At the New School in New York. And the longest serving, get this, president of the Exim Bank. Along the way, he became an expert on trade. He was also, this is even more important, of course it was, appointed to the Wilson Center board by President Obama and served on our board from 2012 to 2016. And in 2018, this is the most important thing, he became a Wilson Center Fellow and wrote this book here. Big deal. Fourth floor. His cubby will now have a little plaque. Fred lived here. That is why this afternoon we're doing this delightful conversation with questions from you about Fred's new book. And I'm really excited. So let's start this way. Fred, how did you come up with the adorable title for this book?
Okay. So the title, I'll tell why I was the acting administrator for 10 days. Can I do that first? No.
Are you going to answer my question?
Yes,
No?
I promised to answer your question.
Okay, yeah.
So some of you may remember in 2000, the election results were somewhat delayed due to the recount in Florida, 35 days. So transition took a long time. So as a result, every agency, in the spirit of leave no child behind, left one person behind in every agency to help with the transition because it started
Called the survivor.
The survivor. Yeah. So I was there for the acting administrator under George Bush. I still was the highest ranking openly gay person in the Bush administration from those 10 days. No one was able to exceed that. And the story was actually my last day. I had no idea when the last day would be, and I had a lunch with someone at OMB, and I get out of lunch, and there was a government car that took me to lunch. The government car is missing. Earlier that day, I'd gotten a letter thanking me for my service, but the letter did not say what the effective date was. So was it the date I got the letter or the date it was written? I'm not a lawyer. I give it to the general counsel. I said, I don't know what to do. I don't want to sign any paper that I'm a government official when I'm not. So I get out of lunch, no car. I check my cell phone. I call the office and say, check your voicemail. We decided you were a guest of the agency, so you should take a taxi and come back and collect your belongings.
Oh, wow.
So I was 10 days the acting administrator.
So that was day 10?
That was day 10. So the title for this book is, shortly after leaving the Obama administration, the Export-Import Bank, I was invited to be a fellow, actually both at the Kennedy School Institute of Politics and University of Chicago's Institute of Politics. And in each of those places, you teach a course to undergraduates, sort of a non-credit seminar, to expose them to politics. And having spent 8 years at the Export-Import Bank, I knew that setting the trade agenda for the 21st century would put everyone to sleep. Talking about the Export-Import Bank alone would put everyone else to sleep.
We're going to get to that, though.
So that's why I said, well, how am I going to get 20-year-old kids, college students, to take time out of their day to come to class? I'll say trade is not a four-letter word, and a few people would say, well, that must be interesting. At least I'll come once or twice. And as a result, we had a great class.
Oh, so this was a title you had used in the past.
In the class. Well, in the class.
It's a retread at the Wilson Center for.
No,
is that right?
It was inspired in the classroom.
Tom thinks that's funny.
It was inspired in the classroom.
Inspired in the classroom.
And it was fulminated and fully completed and fully thought through here.
It's adorable. It's an eye catcher. It's a really smart title. Okay, so also on the front page, in case anyone hasn't noticed this bright yellow front page, it says, how 6 everyday products make the case for trade. So I thought you could take us through the book by taking us through one of those products. And the one I would like to ask you about is the banana.
And these bananas only still cost 19 cents, not $120,000 if you saw the art fair in Art Basel in Miami.
Oh,
so
yeah.
The idea for the banana, so I wanted to take 6 products to make the case for trade, 6 products that we all use every day, and by doing that, make people understand how trade's part of your life. And the way the banana got chosen, when I was up at the Kennedy School at Harvard, they would bring in high school sophomore, juniors, and seniors who wanted to study to get advanced placement. So they would go through 2 weekends of study with Harvard students, and they could then take an advanced placement to get ahead in college. And I had to address this group on a Saturday morning at like 10 a.m., and I'm thinking, how am I going to actually interest a bunch of 15-year-olds to even want to listen to me? And I looked around the kitchen, and there was a banana on the counter, and I said, I'll take the banana. So I walked in, I put the banana on top of the lectern, and it said nothing about it for like 5 minutes. I'm sure they're wondering, like, is he going to eat breakfast here? What's he doing with this banana? Yeah. And then I asked people, what did you have for breakfast? Actually, anybody have cereal this morning? Nobody. This is a low-carb group.
Anybody have breakfast?
Last night, you had cereal for dinner? We have to talk about your household. That is not what you're supposed to end the day with.
So wait a minute. Nobody had breakfast today?
Nobody had cereal. So, we got one person.
Rob.
What was in your cereal? Raisin granola. All right. So many other people put a banana in their cereal. And in fact, bananas are the most purchased fruit we have in this country. Believe it or not, 27 pounds per capita bananas are consumed in the United States. 96%
Per year?
Per year.
Per week?
96% of homes will purchase bananas each month. And so I started thinking about the banana because it talks about trade. We don't grow them anywhere in the United States. They all come from Central America. And the story of the banana, which you can read in the book, I don't want to ruin the plot here, is a story about, frankly, a lot of bad colonialism and a lot of bad corporate behavior, which I comment in the book, is a lot of the behavior, not very proudly, that China has actually modeled in Africa. When China goes into sub-Saharan Africa and wants to extract minerals and iron ore and liquefied natural gas, they do similar things. They build the railroad, and then they extract the materials, and that's part of the payment. And that's essentially what United Fruit did in South America. And so the banana has come to our country, and it is about global trade. It comes from basically 5 countries in Central and South America. And it also talks about, and I talk a little bit about the blueberry. Anybody here have blueberries this morning? Oh, good, much better. Okay, so blueberries, besides being healthy, we used to get them in July and August, maybe early September. With trade, we now import about half our blueberries come from Chile. And as a result, people eat blueberries 12 months a year, and blueberry consumption has more than doubled since about 2001. So imports in this case and trade has helped this market. It didn't hurt the blueberry farmers. It actually created a year-round market and a desire to have blueberries year-round. And the other part of the blueberry came from I was visiting some friends in Nantucket, and before I wrote the book, and there's a little on the buffet, it says seasonal fruit, and I realized we've lost the meaning of seasonal fruit. We're eating blueberries and raspberries in January. We can have papaya year-round. And so a lot of that has to do with trade, and it has changed. And I'll give you an example. In the early 70s, the average supermarket had maybe 9,000 items. Today, and this is an average supermarket, this is not a giant supermarket, has close to 50,000 different items to choose from in terms of fruits, vegetables, imported, cheeses, foods from around the world.
Who knew? So, okay, but bananas, you've told us they're imports. Explain why, why don't you just put this in the context of what's going on with trade then? The banana is this gigantic import that everybody eats, and so how is it doing in the trade environment of the current administration?
Well, so far we have not put a tariff on bananas, so that's a good thing. And you can still buy bananas at Trader Joe's for 19 cents. Avocados is something that used to be grown, and it was sort of a delicacy in Southern California. I have a chapter on the taco bowl and how avocados have gone from, I think, 500,000 pounds a year to more than 4.5 billion pounds of avocados.
Most of them in my house.
A lot of them in your house. And my mother hated avocados. She thought they were this slimy fruit. I could never convince her. And if you're going to watch the Super Bowl, anyone watching the Super Bowl in the next few weeks? And if you eat guacamole, the estimates are we will smash 140 million pounds of avocado on Super Bowl Sunday alone to fill all those guacamole bowls and chips that we're going to have that day. And today, most of the 85% of the avocados are actually imported. We import a lot more avocados. And I have a chapter, as I said, on the taco bowl, which President Trump made famous during the campaign. Here's a product that was actually invented by a man named C. Elmer Doolin, who was visiting Texas, ran into a Mexican immigrant at a gas station who had made a taco pie. He bought the patent and the equipment, brought it back to Disneyland, and the idea said pie wasn't good. He said, I'll make it a bowl. And so the taco bowl was invented at Disneyland. It has nothing to do with Mexico, just the way chop suey has nothing to do with Chinese food. Corned beef and cabbage has very little to do with Ireland, and the taco bowl has very little to do with Mexico. But we enjoy them year-round. We enjoy them 12 months a year, 365 days a year. Whether you're in Alaska or Maine or Texas or California, you can enjoy a taco bowl, and part of that is because of trade.
Okay, but so most of what you've talked about is the source of huge imports to the United States. I thought our president was telling us that we have all these trade deficits. Do we have trade deficits, and how do bananas and blueberries and all the rest of this affect that?
So I have a chapter in here on myths, and one of the myths is that trade deficits matter, and secret is they don't. Trade deficits simply don't matter. We have budget deficits. We should be worrying about the overall health of the economy. If you want to look at economies that have a trade surplus, and tell me if you'd like to emulate these countries, Russia, Venezuela, Iran, Saudi Arabia, all run trade surpluses. I don't think we would trade our economy for any of those economies. So a trade deficit or a trade surplus is no barometer of whether you have a healthy economy or not. And particularly in the United States, because we have what's called a hard currency that's easily convertible and a global currency, it's very easy to finance those deficits. A trade deficit for us is like if you had 2 glasses of wine at dinner. It's perfectly fine. If you started drinking 2 or 3 bottles every night, you might want to take a look at your wine consumption / trade deficit. But at the level we're talking about, it is not an issue. And one of the concerns is with this trade, I would call it a truce or ceasefire with China more than a trade deal.
That's where I was going.
it's this obsession with a trade deficit that is driving this so much of that conversation and so much of the agreement. I remember talking to Tim Geithner back in about 2010 when I was in the administration, and I literally said, we were in India with President Obama, and I said, Tim, why don't the Chinese just buy like $100 or $200 billion worth of more goods from us, and they would shut us up. They would actually, we would simply take that, we'd be very happy, they could buy us off. And he said, he nodded in agreement, and we talked, that's largely a lot of what Japanese companies did. They started just buying more from us to balance it. So in some ways, just buying $200 million more goods from us feels a little bit too little, too late. That would have been fine in 2010, 11, or 12. I don't know that that really works in 2020.
But isn't it also true that the way Trump and Wilbur Ross, who lives right across the street here, compute the deficit, it's just based on goods and it's not based on services? And if you put services in the pot, don't a lot of those deficits go away?
Okay. Anybody here have an iPhone? Okay. So
We have more iPhones than bananas in this room.
probably more iPhones than bananas in this room. Okay, so I have a chapter on the iPhone. So the iPhone, the gyroscope that when you turn it sideways or so forth, the screen pops around, comes from Switzerland. If any of you are at all obsessed about how many steps you take a day, anybody who has done their 10,000 steps so far? Oh, good.
Today?
So the part of the iPhone that keeps track of your steps comes from the Netherlands. The rare earth comes from Rwanda and the Democratic Republic of the Congo. So the iPhone is essentially could not exist. It is sourced from around the world. And in fact, a lot of the microprocessors come from Samsung, the competitor of the iPhone. And the glass actually does come from Corning, New York, in upstate New York. So talking back to trade deficits, we calculate a tariff on the wholesale cost, the landed cost. So landed cost, Apple is rather secretive, but it's in the range of $330, $350 for an iPhone. The portion of the cost that comes from China is $8.46 because they do the final assembly. But as a result, because they assemble all these components together, they substantially transform the product. So we import about $15 billion worth of iPhones a year, and all of that trade deficit goes against China. However, only $8.46 is actually from China. So my point is, the trade deficit with China is a fictitious number. We should be looking at, if anything, part of it comes from Rwanda, part from Switzerland, part from the Netherlands, part from Korea, part from the United States, for that matter.
But my question was also about services, not just those who assemble a good with a lot of piece parts from other countries. I mean, what about our exports? These are exports of accounting services, legal services, et cetera, et cetera. How do those get measured?
We count them, but candidly, they're harder to count. So I would say that the precision, when you ship an airplane or a truck overseas, it's much easier to calculate. For example, a tourist comes to America, because tourism is an export. So we have a tourist comes to America from France, they buy their airline ticket, and they buy a hotel package. So that probably is recorded as part of the service export because they came from overseas. Then they go to McDonald's, or they buy a theater ticket, or they go to a baseball game, and all of a sudden it becomes much harder to calculate the full impact of those service, because those are all service exports. They're all being sold to foreigners using foreign money to buy them. So our calculation of services is much less precise. And frankly, you all know we're a service economy. 70% of our economy is services. So this focus and obsession about steel and cars and trucks and airplanes, we should be focused on higher education. We should be focused on entertainment. We should be focused on financial services, accounting services, where we have a real competitive advantage, which support many more jobs in this country, but we're not there yet.
And even if you say trade deficits don't matter, if we calculated our trading value with most countries, including China, to include all the rest of this stuff, we might not even have a deficit,
I mean,
right?
some of it is counted, but I would say there's a lot more sloppiness in that number than in hard goods.
So let's talk about, and we're going to get to other people's questions, 2 trade deals that happened in the last week. Imagine that. I think most of you think all we did this week was impeachment, and we're still doing that. But so far as I know, a phase 1 deal with China was signed yesterday in the White House. And so far as I know, USMCA passed at least the Senate, or is about to pass the Senate.
89-10.
89-10. Yeah, I'd call that a bipartisan victory for a change. And has it passed the House yet? Did it pass the House?
385 to 41.
Oh, okay, fine. So, 2 trade
It's
deals.
your old chamber, remember that? Yeah.
Yes, but I guess I've just been watching all the networks, and they don't cover those things. They only cover the I word. So let's talk about those 2 trade deals. I mean, are we proud of those?
I think USMCA, the fact that there was 385 votes in the House of Representatives, 41 opposed, and 89 in the Senate, we have never had a trade deal with that overwhelming a vote tally. And I think that is a good thing. And I think, although there are some progressives who say, well, that's not the new standard, we have to do better, agreed. We have had too many trade deals that have passed on a razor-thin 1 or 2 votes, squeaked through. This is, I think, sets a new floor in terms of how do we engage, make sure that labor and other stakeholders are fairly represented at the table when we do a trade agreement. And I think this will become a much higher standard. It's also the first one. People are telling me they can't remember. It's the first one in this century, or the first one ever that the AFL-CIO has actually endorsed. So I think those are those are 2 things to really look at very carefully. And I think, as someone said to me earlier today, if you had asked me 2 years ago, would we have a bipartisan trade deal under President Trump, I would have said never in the world. But I think there was a unique set of circumstances that we have this trade deal under President Trump. And he and friendly Bob Lighthizer should be applauded for that.
Well, and so should the Democrats in Congress who stepped out of their comfort zone
And made it-
to support it.
Yes.
Yeah. Well, what about the China deal? Yeah.
So I think the China deal, they only released the actual text yesterday virtually at signing, so it's harder to get a full grasp of it. It is a little bit more of a truce than a real trade deal, so to speak. We started a trade war, and now we've called a ceasefire. So we have reduced tariffs on a lot of items. This iPhone was scheduled to have actually had a tariff attached to it. And my hunch is the administration was not angry, because putting a tariff on iPhones would have made it very clear to Americans that there's a tax being paid by you, and it's not paid by, quote unquote, the Chinese, as the president has often claimed. I think it's a good thing. You know, it's better to have a truce than to have an active war. It is better to, I've spoken to some people in the financial services. I think it's going to be, we can move forward on that in a much more clear-eyed way. There are more protocols if there's going to be a dispute, so it won't be just automatically going to a tariff, but there's actually just how you resolve disputes between companies in China or companies in the United States. So I think those are good things. With all trade deals or all trade agreements, we'll have to see how it works out. I think there's a question in the agriculture section, which has been a big source, that we're going to essentially double the exports of agriculture goods to China. And to use a bad cliche, whether all these farmers are going to want to put all their soybeans in one basket and take the chance that they're going to ramp up production, sell it all to China, and not know whether on a moment's notice it could be turned off again, remains to be seen if that happens.
Well, just to be a little cynical, this is an election year, so they're going to sell soybeans this year, and we'll see what happens next year.
My question, whether they're really going to go up to 40, 50 billion will be a question.
Well, yes. And one more question from me, and that is, you mentioned disputes. We created a body some decades back called the World Trade Organization, designed to resolve disputes. And one of the big deals a few decades back was that we admitted China to the WTO. Last time I looked, and again, I think I'm behind in my TV cycle here. Last time I looked, there was...
Ed Sullivan is not on any longer.
In fact, I have one more question. Right. There was we hadn't filled our quorum at the WTO. We're starving the WTO. Sounds like what we did to the Exim Bank. That's going to be my last question. But so what about the WTO, and what's the agenda with this, and do we need it?
We certainly need a body. The challenge is, a little bit goes, I think, back to the Trans-Pacific Partnership, and that is there's a group of thinking in Washington and in administrations that our best work is done in collaboration with allies. It may be slow, it may be not as getting everything we want, but we get more consensus. There's another view we should act more unilaterally and simply we're the big guy on the block and we should call the shots, and people don't like it, too bad. So those are two very different approaches to how we get things done. The WTO is more of the former, is we got to find a collaborative way. And we have generally prevailed at the WTO. We have generally won those cases. China's actually lost more cases, I believe, than we have at the WTO. But there is a certain allergic reaction to something supernatural that's outside of our borders, that's someone telling us what to do. And but that's sort of a philosophy problem versus been shown by evidence.
Well, speaking of allergic reactions, last question. The Exim Bank, in your last days, what was not the most robust organization. And there was an agenda by some, basically to starve it just the way the WTO was being starved. That seems to have ended, and the Exim Bank is back. Could you describe what happened and whether you think its revival is going to add value to our ability to do trade, exports, et cetera?
So first of all, it's the Export-Import Bank, founded in 1934, and it was founded by FDR for the purpose of saying, if we're going to support jobs during the Depression, one way to support jobs is to export more goods. In those days, more goods, but now it's goods and services. And that's why it was founded, and that's why it existed for 85 years, is to make sure, if we want to sell abroad, that American companies have the financial resources to do so. So you say, well, why do they need the government? Well, many times banks, particularly I remember being out in Ohio with Sherrod Brown, and I was with Sheridan because he was on the banking committee, and there were 15 bankers in the room, and I asked, and not one of them had done work with the Export-Import Bank, and I said, how many of you have small business customers? They all raised their hand. Do you think any single of your customers are exporting to the rest of the world? I mean, so there is a certain, again, allergic reaction. Bankers like to sort of, they like to sell to the next state or the next city. So Exim Bank exists to fill in that gap. When local financial or even foreign financial institutions feel reluctant to finance an export, we would step in. We got a fee. We essentially insured the loan. We would insure the loan. Air India is going to buy airplanes. People are kind of nervous about lending Air India money. Well, they pay us a premium, pay Exim Bank a premium, and we would provide a guarantee for that loan. As a result, the loan went forward. Boeing was able to make the sale.
But so what happened with the quorum?
Well, so the Export-Import Bank is self-sustaining. So we actually, all the money we collect in those fees, those insurance premiums, pay for all the staff, all the loan loss reserves, and actually generate a profit. I would say in government, because it's not used to making a profit, it's called a negative subsidy. So it took me 6 months to feel good that a negative subsidy was good, because that meant money was coming in. It's like if you go to the doctor and the doctor looks at your x-ray and says everything's negative, you realize that's a good thing. He hasn't found anything. So we actually make money. I still say we because I'm very, very fond of that agency. And but there was the Tea Party in particular and the Freedom Caucus saw it as corporate welfare. They saw it as tilting the playing field, and partly because it was unknown and it had a sunset clause. It has to be renewed every 3, 4, 5 years, now 7 years. If Congress did nothing, the agency would cease to operate. And we all know Congress can be good at not doing
Congress is
anything.
good at doing nothing.
Yes, they're very good at that. So they let the authority to act lapse. So the bank could make no loans. All we could do was service the existing loans, which made a number of lawmakers upset because they were hoping the day that we lapsed, everybody would walk outside with their little box. And no, we actually had to operate. And we were lapsed for 5 days and 4 months, not that I was counting those days. And so we got authority to operate again. But then we needed a quorum. Just like the SEC and these other federal agencies started during the Depression, we had a 5-member quorum. We needed 3 members for a quorum. I was the only board member left. So
That's called the last man
I was the
standing.
last man. Both at the SBA, and I think I should not go to any federal agency. I'm really
I think
bad
you
at
need to leave the Wilson Center right now.
So, but President Trump did nominate members to the board. 3 were confirmed, so went back into operation in May. And just recently, in the last budget accord, it got a 7-year authority to operate to 2026, which is the longest authorization it's ever had. So actually, I think that provides a lot of stability. And the reason 7 years was important is it sends a message to our competitors around the world that this bank is here to stay to support U.S. jobs, and it says to U.S. companies that are exporting, you have a reliable place to get financing.
Okay, so in the spirit of nonpartisanship, let's say the Trump administration has just revived the Exim Bank. It helped pass USMCA, and it did a phase 1 deal with China, which is an improvement over no deal with China.
Right.
3 things in 1 week. Huzzah. Okay, good. Now, questions, please identify yourself, and Kent Hughes, ask a question. Wait for the microphone. I think we must have a microphone. Yes, we do. He's over there by the wall.
Well, the micros, there's a man here I want to point out, Manny Manriquez. Manny works for the Japanese Automobile Manufacturers Association. And my work with Manny actually helped fill a whole chapter on the Honda Odyssey. And the Honda Odyssey is the most American car on the road today. It has more of it's built in America, more components than any other car. And Manny was a spectacular, and his organization in terms of leading the way on that. And we actually recently made a trip down to Alabama to the factory where those Honda Odysseys are actually assembled. So I just want to thank you again for coming, and thanks for being a great
Thanks, Andy.
contributor.
Thanks, Andy. And hello to Michael Waller, who is a very generous supporter of the Wilson Center and comes to almost everything. My goodness. All
Michael.
right, Kent.
Kent.
This is Kent Hughes. He works here, and he knows a lot about trade.
Fred, thanks very much. You reminded me that 2 weeks ago I had Peruvian blueberry, and now I have Chilean blueberries. But I want to return to China, where the business reaction to the Phase 1 agreement has been generally positive, good step, need to keep it up. They really clearly want to see a Phase 2. What do you think Phase 2 ought to look like?
Well, I mean, the challenge we have with China, which has not been addressed, and is much more difficult to address, is there's what are called state-owned enterprises, or sometimes you'll see the acronym SOE. I think I put that in I have a glossary of sort of crazy terms that happen in the trade. So they are very heavily subsidized. And it's very hard for U.S. companies to get a fair shake there. There still have been forced technology transfers where you have to take a local partner, you have to sort of give away your trade secrets. It's the equivalent of, it's not a perfect analogy, but it's like no one can buy the formula to Coca-Cola. You can license it, but you can't buy it. So they often want, what they'd like to have from American companies is things you can't buy, things that are really the sort of the secret sauce that makes companies really special and unique and gives them their advantage in the marketplace. And we'll have to see how well that is really going to be enforced, because part of what you need at that and with intellectual property, sort of the design, is you need rule of law and you need courts. And that's not something that is very robust in our country, but not so robust in a place like China. And frankly, it was a challenge even when we went to business in Mexico with NAFTA 25 odd years ago.
But isn't it true that China's been stealing U.S. intellectual property for years?
Years.
So
Absolutely.
fixing this is not going to be easy.
Fixing this is not going to be simple at all.
And that the next phase is the harder phase. That's what most people think.
Yes.
Yes. Rob Litvak.
Well, while the mic's coming, I want to thank Bob because he was able to provide me with office space, support, and a great Sean Morrow, who is my researcher when I was here. So thank you.
You're welcome, Fred, and I'm sorry my breakfast choice was not of help to you in extending your initial, case study.
You will not be invited to the next talk. I have to find a banana-eating person in the audience.
I'm actually banana-phobe, but that's another thing. The question I have is one I think particularly pertinent for the Wilson Center, because Wilsonianism is associated with a whole school of international relations, that the proliferation of democratic governance and free trade leads to a Pacific international system, and there's been a consensus in the country about it. It's been under sort of challenge, and the title of your book sort of captures that from different sides of our political, both sides of our political continuum, as globalization has led to jobs being kind of offshored, et cetera. If that's actually a verb, it's probably a Washington verb. But anyway, we are where we are right now, that there's been a renationalization of our foreign policy. You see it in America First and trade policy. But just this has not historically had a happy outcome in the past. And I just wanted to get your perspective on where we're at now with, for example, I don't recall a debate in this country that the European Union is not in the U.S. national interest. And yet there are parties that are seeking to kind of dismantle the EU into component parts on the theory, presumably, that we will have better and more preferential trade relationships with small units rather than with some collectivity. So could you just kind of pull out the optic back to this sort of macro issue and reflect on it?
So is a part of that question, because I think it is, that we have a president who wants to do bilateral deals and who doesn't like multinational organizations and multinational deals. I think that's the lowest part of a much more, cosmic question.
It also reminds me of a quote Madeleine Albright uses, which I like, which is, the problem with multilateralism is too many syllables and it ends in ism. I think the review here in the United States about the Trans-Pacific Partnership, as one example, was that it is so difficult, and Jane knows this from her time in Congress, so difficult to get a trade deal through Congress. And look at how long it's taken on USMCA or others, that at least if we're going to expend that much effort, we could do it with a few countries at the same time, and therefore we'd get a bigger impact and more harmonization. I remember on an early trip to Brazil when I was at the Export-Import Bank, and we were just finishing up Colombia and Panama and Korea, which took 5 years, 6 years. And the Brazilians said, well, we'd like a free trade agreement. And I remember looking, I said, it's not going to happen. I could not imagine someone else embarking on that because it is so difficult right now. I mean, my view would be, and I've talked to a few other people, we should do multilateral, we should do bilateral, we should do whatever works. When we did NAFTA in the early 90s, there were about a dozen free trade agreements in the world. Today, the estimate is between 400 and 600 free trade agreements globally. So we were at the head of the pack, and we've sort of been a bit sidelined. And so if we believe in them, and they're really, partly I think they've been missold is the part of the problem. They're not about jobs. And politicians like to campaign on jobs. They don't like to campaign on better harmonization, better relations with our neighbors, and those type of things. Because if you look, one example I use in the book, if you look at the Trans-Pacific Partnership, I would not recommend reading it. It's 5,000 pages. The word jobs appears 6 times. 2 of them because it's the name of the Japanese and the Australian labor agency. So there's 6 references to the word jobs. The word jojoba oil actually appears 11 times. So just as a point of reference, they're not really about jobs, yet they're always sold that way.
Well, it's interesting, but one additional comment there, because you did invoke Congress, the incredible disappearing Congress, where it is extremely hard to get done what just happened, to get USMCA or any multilateral trade agreement approved on a overwhelming bipartisan vote. Well, so my point is that these agreements, TPP in particular, the Trans-Pacific Partnership Deal, have other values other than trade. The thought was that if we, the U.S., which has a large trade relationship with China, have a trade relationship with other countries where China is their largest trading partner, and that applied to every country that other than us, the other 11 that were in the TPP, this would give us, as a group, a lot of leverage over China. And China, in case anyone missed it, isn't rising. It rose. We may have missed the movie, but it rose, and it's an economic behemoth. So having these relationships would give us a buffer against China, not just in trade terms, but in security terms. That was one of the other parts of the agenda, which was why this former member was strongly in favor of it. Other questions? Let's see here. Michael Waller, I got a call on you since you're so nice to us.
I hope that's not out of a sense of obligation, Jane, but thank you. I have a question that's related somewhat to what Robert asked. The big overarching question is, why did you write this book? And did you, there's underneath that question is a couple of assumptions. One is that you have obviously a considerable amount of intellectual capital. We want to get out there in the public so that people can be more educated and have great conversations about this important subject. But it may be that there were trends that you observed that were headed in the wrong direction, and that you might want to suggest some course corrections to those trends. And if you had the author of those other trends up there in that chair instead of Jane, and I can't imagine who that might be, but if you had them there, what would the give and take between those 2 points of views be like?
So, Michael, I had no intention of ever writing a book, ever. My partner here, Tom, who's written 3 books and a LA Times Book Award finalist, certainly was an inspiration in my even thinking about a book. But in teaching this course, people rather aggressively, particularly my guest speakers, would come up to me and go, "You have to write this book." And I go, "I've never written." No, this has to be written. Somebody has to take this on. We're going in the wrong direction. This idea about protectionism, all imports are bad, everything foreign is bad. This is a bad direction we're going in, and we've got to start pushing back against that. So that's what really inspired it. It's really with students. And as a fellow at both institutions, you bring in a guest speaker each week, and the students get to meet people. I had Eric Cantor, I had the chairman of Caterpillar, I had Gillian Tett of the Financial Times, I had Jared Bernstein, from all sides of the spectrum. And frequently the guests would say, "Why aren't you writing this book? We need a book like this. This is a really great class. We need a book." So that's really what it came from. But protectionism has been a ruination. I would make the following statement, and I'm going to put Manny on the spot. I think were it not for NAFTA, we would not have an auto industry in this country. In the auto industry, when it was the big 3, Chrysler, Ford, and GM, 90% of the market, we had a lot of those cars going up. The doors didn't align, the paint didn't work very well, the windows leaked. There were a lot of problems with it. Foreign competition changed that, and then going between Mexico, the U.S., and Canada, we've made more efficient vehicles. They work better. They're higher quality, and as a result, I actually think trade saved the automobile industry. It did not hurt the American auto industry. Manny, would you?
Can he have the mic, and then we'll go to you at the end of the table? Yeah.
What it did was make North America competitive as a manufacturing platform that could then, as an integrated system, compete against Europe, Asia, China, which is obviously a manufacturing powerhouse. So I think you're right. We're competitive today to the extent that we are due to NAFTA and USMCA. We'll see where that takes us.
It's also true that there's a huge amount of cross-border manufacturing, right?
That's absolutely right. That's
For
absolutely
cars.
right.
And if
I
we
often tell
didn't have-
people,
Yeah.
if you remove the borders on a map between the United States and Canada and Mexico, and you just place on it sort of a network, a production, map of the production network, automotive production network, it looks like one giant integrated system. It is an ecosystem, and trade flows every which way. And I would add too, because we were talking about services, R&D is a huge piece of that, right? And that's the U.S. strength in the auto industry. Is R&D.
And foreign auto manufacturers, certainly the Asian ones, have beachheads all over the United States. And
Absolutely.
making cars in the U.S. for the U.S. market lowers transportation costs.
Absolutely.
And builds jobs. There are jobs connected to
Japanese
some of this.
companies make 1 in every 3 vehicles built in the United States.
And they're very good neighbors. I mean, in my old congressional district back in the day, Nissan, Honda, and the other one was had their headquarters in my district.
That's right.
Yeah. So, did you want to say another thing? I just wanted to call the man at the end of
I
the
was
table.
just going to say, I mean, the whole idea of NAFTA, by the way, was started by Ronald Reagan because he was worried about a united Europe. So he looked at Europe and said, we need to have something to counterweight Europe. So it was idea of Ronald Reagan, negotiated by George Bush, signed by Bill Clinton, but everybody puts everything, all this on Bill Clinton. It actually he was the last guy on the tail.
Was on his watch. Toyota was the other company at the end of the table there.
And the first foreign company that made cars in the United States actually was Volkswagen, 4 years after the end of World War II. They started building cars here. Yes.
Thank you. Thank you. My name is Afshin Malavi. I'm a former fellow here at the Wilson Center.
Once a fellow, always a fellow.
Exactly.
Right.
Exactly. It's great. It's good to be home. And I'm currently at Johns Hopkins SAIS. And it sounds to me, from the answer you just gave and from the title of the book, you are pushing back against a narrative that trade has been damaging to us in America, et cetera, et cetera. And so I commend you on that, because I think we've benefited a lot more from globalization than sometimes globalization is given credit for, shall we say. But what I wanted to ask you is, I wanted to bring back the issue of China. When you were talking to companies, I remember when the Obama administration talked about the rebalance to Asia, and sometimes referred to as the pivot to Asia. When I would talk to companies in the private sector, they would say, well, we pivoted to Asia a long time ago. We see the growing middle classes, the rapid urbanization, the unprecedented connectivity, and we've been pivoting to them for a long time. And so, when you talk to folks in the private sector, I imagine you're talking to them today as well. What is the feeling about this kind of, sense of, protectionism and that trade is bad, and how are they reacting to your arguments?
Well, I think two thoughts come to my mind. One, I think just the instability that these trade wars and tariffs have introduced puts a chill in the air about where you should invest, where you should be building factories, where you should be putting in resources. And so that has actually been damaging to just economic growth, because Dave Cody, who used to be the chairman of Honeywell, used to say to me all the time, he says, capital is a coward. If people are afraid of what's going on, they're less likely to want to invest. If something's bad's going on in your community, you're really going to buy a house there? Well, you might think twice about that. So I think that's one problem we have right now, and that is there's enough vagaries in the business world, just understanding consumers and consumer trends and commodity prices and supply chain, without government adding another level of uncertainty to it. So that would be my one thought. And I would say that in my time at the Export-Import Bank, one of the many things I applaud President Obama for is he created the National Export Initiative, which was that we ought to double exports in 5 years. We did it in many countries. We didn't do it across the board, but we did it in many countries. And people forget, in 2002, not that long ago, we were the largest exporter of goods in the entire world. We got overtaken by Germany, then by China. We're now back to number 2. And yes, as Jane and I talked, we should be emphasizing more services, but we could also export more and more goods as well. And I'll give you one, we had a goal at the Export-Import Bank to do more business in sub-Saharan Africa. About 1% of U.S. exports go to sub-Saharan Africa. 1%. And I would say we are just not part of the problem. We're not taking advantage of the market opportunities there. And there are challenges there. There are 54 countries. There's a colonial legacy. But we should be doing a lot more there than we are doing. And President Obama and others have tried to encourage more companies to be operating and to be selling in places like sub-Saharan Africa. So I think there's a lot of opportunity out there. We just haven't really tapped it.
Well, 50% of the population growth in the world between now and 2050 is going to be in Africa. So that's where the market is, and we're pretty stupid if we don't reach for that. Meg, did you have a question? Meg Lunsaker?
Thank you. I'm Meg Lunsager here at Wilson Center.
Formerly of the IMF.
Formerly the IMF, and a long time ago, the Deputy Assistant Secretary for Trade and Investment at Treasury, and I had the pleasure
forgot that.
of testifying before Congress, trying to get a reauthorization for the Export-Import Bank.
Bless you.
No, and the funny thing
How'd
is...
you do?
Well, we did get it ultimately, but the other, a few months ago, I found a copy, yellowed copy of my statement. This is in the late 90s. And I read through it, and you could have used it now with just updating the numbers. It was all the same reasons that you had highlighted.
Which proves that we have the most brilliant people at the Wilson Center.
Well, thank you. But really, my question comes back to, really something that both of you have been touching on. How do you get people who benefit from trade to speak up, to give their congressmen and senators the cover they need to be able to support agreements such as we achieved this week in that USMCA vote? That was my big frustration all those years. It applied to the IMF too, but that's much more fuzzy, in terms of the connection to jobs in the U.S. But there are lots of jobs related to the services, Jane, what you're pointing out, and certainly all the different exporting parts of the economy. And it's very hard to get them to speak up supporting trade agreements. So why is that? How do you change that? How do you keep these high percentage votes going in the future?
Well, actually, in the very last chapter of the book, I think on the last page or two, I said, all right, it's now up to you, reader. You've read the book. You've seen how you've benefited from trade. And it would be better for this whole country if we talk more about it, because otherwise the forces against it will overwhelm the situation. Though we have to understand, with the vote this week, today, by the Senate and by the House in December, we need to sort of revel in that victory, because that's a real change, and we need to, that says a lot. And secondly, I've seen polls from Gallup and Pew. The amount of Americans who think trade is good, better for our economy, is almost at an all-time high. It's over 2/3 of Republicans and Democrats seeing trade as beneficial, and the fact that we're engaging with the rest of the world as much more beneficial. Now, some say that may be a reaction to Donald Trump. If he thinks it's bad, maybe it is good. A little contrarianism there. But regardless, since 2015, the numbers have been going up about 25 points. So we're on their way. It's hard. It's hard. That's why I wrote the book, was to try and make it easy and give people a handbook and give 6 products to make that case so that it's more tangible and so forth. But I'll give you one last example. Today, the average household in America spends less than 20% of its income on food and clothing. In around 1900, it was north of 50%. So when we go to the grocery store or go to Walmart or Target and buy clothing, and we get a bunch of jackets or sneakers or T-shirts or outerwear at a really good price, what do we think? I was a really good shopper. I know how to find the good bargains because I'm really smart. We don't think that, well, maybe trade had something to do with that. We think we're really smart. And contrast that with gasoline prices. When the gas prices go up or down by 1 penny, politicians hear loud and clear, because they're like billboard signs on the side of the road. Gas is now $2.99. God forbid it goes to $3.01. It's like a major calamity in this country.
Which does remind me of one more thing that we haven't discussed, and that is the Trump sanctions. As a strategy. And most people think that they impact the Trump base far more than most of us sitting around here. Not only because they have a harder time exporting their soybeans, but because the price of goods at Walmart goes up, all kinds of goods, especially around holiday times, and so he backed off a little on the sanctions. And it was particularly upsetting to our neighbors, Canada and Mexico, to have him invoke a piece of our national security law as a justification for sanctions. This is before USMCA passed and we all made peace. What do you think of sanctions as a form of leverage to get countries we trade with to do things that are more in our interest?
I mean, sanctions like boycotts are difficult. They're difficult to enforce. They're difficult to maintain for a long time. But I would say the Trump administration believes in more. The word people use is unilateral. You know, we're the biggest economy. We'll call the shots, and people don't like it. They'll just have to toughen up. That's not been how, generally speaking, Republican and Democratic administrations have viewed the world up to now. And we, I think, as a country, partly because we're in a capitalist system, we don't have national champions. You know, if Japan is negotiating about automobiles, sorry, Manny, you know, they're thinking about their 2 or 3 automobile manufacturers and wanting to make sure that the deal is good for those companies. We tend to say American companies should compete globally. They ought to compete on the open market, and we're looking for sort of a more level playing field. The rest of the world, I would say, is not looking for quite the same degree of level playing field. So people can say, well, we haven't really helped U.S. companies as much as we can. Well, part of what we want to do is we want to get everyone at the table and into some sense of agreement, because we have felt as the largest economy of the world, if we can get everybody at the table and a great general agreement, we benefit. My example would be if Walmart moves into a city and they actually give money to the local high school and money to the library and they help the playgrounds, and therefore it's a better community, Walmart, being the largest employer, will automatically benefit. Well, it's not that different the way it has been for the United States. And I think that's why maybe we gave up a little ground, because we wanted to get everybody in.
That's a great way to close, unless there are any other questions. We have one more question here. And are there any others after this gentleman?
Okay.
Yeah, but we have another one. All right. So we have time. And remember, there are books outside, so get ready, get ready.
There's
Yes.
still a few left.
Hi, I'm Steve Schleicher, a retired Foreign Service officer. Worked on earlier phases of U.S.-China trade and investment agreements. I think it's important to make a distinction when you're talking about sanctions between policy-related sanctions and tariff threats or increases. And, you know, you were talking about both there, but I think the jury's out on the positive policy-related effect of sanctions against, for example, Iraq in the old days, Korea today, et cetera, many of which are multilateral and involve NATO or the United Nations, et cetera. As opposed to what we've just been through with the so-called trade war and the various rounds of tariff increases that were brought under different parts of U.S. law, both against our allies in Europe and North America and against our competitor, China. So I just throw that out as a distinction to make and think about. I have a question for Fred relating to your experience as president of the Exim Bank. You were a member of the global collection or association of import-export banks, right? You must have had opportunities to get to know and have some kind of dialogue with your Chinese counterpart in various meetings. Is that fair?
Yes.
You might have gotten to know this person well, it looks like, possibly.
Yes.
Had a few white lightning shots, perhaps.
Right.
Mao Tai. In the
We
process,
avoided at all costs, Mao Tai.
yeah, the most expensive liquor in the world now, I guess. That is a different trade story. Maybe you could pick that for your next volume of product profiles. But in the process of getting to know this person and know the China economy as it related to providing government credits and guarantees for, for exports, how much of a sense did you get of the incredible difference in the way the Chinese economy and polity is organized and we are? And do you have any sympathy for the view, even of Peter Navarro, say, as to the justification for the unilateralism of Trump's trade war.
So, in the export arena, and I'm glad you brought that up because I think that's been lost in this whole discussion with China that we've had in the last year or so. I mean, where we want to be making sure we are well positioned is to compete against China in sub-Saharan Africa, in Latin America, in the rest of Asia, where we make locomotives, they make locomotives. We make power equipment, they make power equipment. And we also have, as Jane has pointed out, but we also have the advantage of a lot more services that are much more desired and much more trusted. But China gives its exporters a giant bear hug. They will. I had a meeting with the rail authority in South Africa, and we were U.S. companies at that time. GE Locomotive and EMD, which is owned by Caterpillar, were competing against the Chinese. And the Chinese, there is something, I don't want to get too technical, there's the Organization of Economic Cooperation and Development, the OECD. When I was a dean at the new school, it was affectionately called the Organization for Endless Conversation and Dialogue. But they set the ground rules that all countries have to operate in if we're going to provide financing for exports to make sure it's a level playing field. China is not a party to it. So, for example, locomotives, we can provide no more than 14 years. And it has to be like a mortgage, self-liquidating. So you have to borrow the money, and by the end of 14 years, you owe nothing. Well, the Chinese were happy to say, we'll offer a 5-year grace period. We can give a 20-year loan. That does change the level playing field. It's like if the Ford dealership says cash only, and Toyota says, well, you can finance over 5 years, that's an advantage Toyota has over Ford. So that's been a concern to try and get China into the fold. President Obama tried to do that in 2012 with then Vice President Xi. They set a 2-year goal. That was in 2012. We're now running 8 years later, and it still hasn't been done. And so one thing I would say about the China deal, they're very good at saying yes, 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 and the can gets kicked down the road frequently and doesn't really.
And with their Belt and Road Initiative, they're going in the opposite direction, offering incentives. Yeah. Bruce, who are you? Wait, and you don't have a microphone either. Wait. Wait. He's not listening to me. Andrew, talk to him. Where's the microphone? Oh, there, it's going.
Hello. Oh, there it is. Coming off your comment.
Who are you?
I am Bruce Blakeman. I'm here at the Wilson Center. Thank you very much. Coming off your comment that the Chinese talk a good game and typically don't follow through with it, which happens on multiple occasions. I've not only done trade negotiations with the Chinese, but I also did business in China for 15 years. One of the issues that we ran into quite often around the world was corruption. And the Chinese have no qualms about spreading money around. And that doesn't just affect American government, but it also affects American companies trying to invest around the world. And what we found at Cargill is we'd go into Africa or we'd go into the Middle East, and if we were following the Chinese, we could not do a deal because everybody else had been paid off. And again, another element that we were trying to deal with in the world, this whole idea of corruption and money disappearing. And I haven't read your book, unfortunately, but any thoughts or comments on that?
Have you bought the book?
No, I haven't. That's all you care about, right?
No, I want to change the debate. The corruption issue is a very critical issue, and I would say this is one area, a very tangible area where the U.S. has provided a real leadership on the Foreign Corrupt Practices Act, and Jane's very familiar with that. But we have, in many ways, set a standard and led the way in terms of rooting out corruption, which is very difficult to do. But we sort of took a stance on that before almost anyone else. And so it's one of those areas of American leadership that doesn't trickle down to the everyday voter or someone at the supermarket, but it has made a difference. And there's still a long way to go. But we were one of the few countries, and Britain has also joined in terms of trying to have much more rigorous rules around that. When I joined the Export-Import Bank, we had a company that, as a result, was threatened to be disbarred from doing business with the U.S. government because it was found to have provided bribes. And one of the bankers at the Export-Import Bank came up to me and said, you know, I don't, it was a small country. I'm not going to say the country in Africa. I don't know, maybe we shouldn't do this. I said, John, it was the chairman of the board. This was not just a rogue manager of the branch office. This was the chairman of the board. No, we can't. We cannot go forward with this. So I applaud this. I know I also need to have time to sign books.
Yeah, well, let's take, okay, last three questions. There's one here too, and we'll close with you. Okay.
Carl Strickwood, I'm a historian. But isn't the problem with trade that the people who are hurt, the small sector often, scream much more loudly than the vast mass of us who are getting a small increase in our welfare? And the problem in the United States versus, say, Europe and Asia, to the extent of my experience there too, is that we haven't done the countervailing measures nearly as well. Or for that matter, Canada. So I'm from Michigan, and the auto industry in Canada, when it was in a downturn, the Canadian government and the Ontario provincial government tried to do something for the workers. Michigan did a little bit, but the United States government did very little. And again, if you look at Europe with the EU, with all its problems, they've done a much better job of handling some of those problems. So
Exactly right.
You talk about the advantages, but
I make
what
that
about
point in the book.
disadvantage?
We fell down on the job. Our country has fallen down on the job. People got badly hurt. Communities got hollowed out. People lost jobs and never regained that income. And we really didn't take that seriously enough. We assumed that jobs were fungible, that, we're adding 1.5 million jobs a year, and even if the high estimate, which people say, what if NAFTA quote unquote destroyed 25,000 jobs a year? Economists will say, well, we added 1.5 million, we only lost 25,000. That's okay. Yes, but not if you're one of those people in that community that got really badly hurt. And that's part of the reason we've had such a devil of a time with trade right now, is because we did not sufficiently address that. I think there are a couple of factors. One, you use that word social safety net, and social became a dirty word in this country. And two, the states that got impacted happen to also be critical states in presidential elections. Ohio, Pennsylvania, Wisconsin, Michigan, places like that, which were hurt the most, also happen to be critical. So you have those two factors going on that has made this much more difficult. There's a cartoon in the book that talks about that with Ross Perot back in the 92.
The giant sucking sound. Yeah. We have a federal program called Trade Adjustment Assistance, which has not worked well, and there's been conversation forever about changing it, making it much more robust, and that never happens. Over here, and then final question over here.
Oh.
What was your question? Criticism. Well, we
should have done a better, and we need to do a better job now.
And it's also jobs disappearing as we become more, the use of robots and the use of AI and other tools make some jobs obsolete.
In the 8 years I went as at Export-Import Bank, we used to work with the Bureau of Labor Statistics. How many jobs are created for $1 billion worth of exports? How effective are we? And when I got there, it was about 7,000, 7,100. 8 years later, it was in the high 5,000s. Mm-hmm. So, in other words, each $1 billion worth of exports was supporting fewer and fewer jobs. Now, part of that's actually a good thing, because it means we're getting more efficient, there's more automation, and therefore we can be more competitive. But at the same time, it's also supporting fewer jobs.
Right. Last question.
Thanks. Me again, Manny Manrikens from JAMA. And I should say it was a delight supporting you on the chapter on automobiles, Fred. And I should also mention my wife, Annie Manriquez, was a fellow here and worked with you.
It's just all the best people. Yeah.
Small world. Fred, you mentioned the unique set of circumstances that led to this record-breaking vote for the ratification of USMCA. And I want to put a fine point on the unique set of circumstances, because the old formula was a Democratic president was able to bring a trade vote over the finish line working with Republicans in Congress and pulling along some Democrats. This is a very different formula now, and I think there's a very clear argument to be made that if Trump didn't have so much power in the Republican Party, then a lot of Republicans wouldn't have voted for USMCA because of the changes to the labor rules and some other chapters and elimination of ISDS, et cetera. So when we get to a Democratic administration in the future, we now have sort of a different situation, a different political landscape. How do you see the politics taking shape, and how can we sort of support free trade agreements going forward and get them ratified?
That's a great question, Manny, because I think Trump being seen as a protectionist gave some cover to people who were saying, well, trade deals aren't protectionist enough. We've got the most protectionist president, the high tariff, high sanctioning president. So that provided some cover. You know, I would like to believe the following. I'm generally still an optimist in life. And that is that the standards that are in this USMCA set a higher standard of what will be acceptable in terms of labor and how we deal with labor issues. And hopefully that will provide some, and we'll see how it works, and that provides some, it'll be harder to back off from that. So I'm hoping that that will actually set just a new platform for these agreements. But until this vote, I didn't think we'd see another trade agreement for 5 or 6 or 7 years, and we'll see now. I think that it may change. The other thing is we got to be more honest and more candid. It isn't about supporting a lot of jobs, and we got to understand what the benefits are. And so we don't tell people it's all about jobs, and then they say, "Well, I didn't see any jobs." So part of it, we've just missold it. We kept, we sold it on something it wasn't intended to do.
But it is about the economy, stupid. I mean, I think the point was made to Trump very clearly, and I think it had more to do with this than his ideology, that if USMCA did not happen, if he didn't stop the trade war with China, which at least this phase 1 deal, even if it's not much, did stop for a moment, the markets would crash, and that's not good for votes. And this is an election year. So I said 3 really nice things about the Trump administration. I would just like to say that in this case, I think his agenda was more short-sighted. But raise your hand if you're now persuaded that trade is not a 4-letter word. Well, raise your hand if you're thinking about buying Fred's book outside. It's a smaller group, but books are for sale. Fred will autograph them and tell you how wonderful you are. And I would just like to tell Fred and Tom one more time from my heart how wonderful they are. Thanks for coming.
I want the last word to just thank Jane again, a friend of over 25, 26 years who has been a spectacular friend, does a great job here. I was happy to be on the board and generously gave me a fellowship here so I could work on the book. So thank you. That's Rob. He left.